December 2025. The Fed overnight delivered its third rate cut, but Fed Chair Jerome Powell set the bar higher for further moves in the future. He said the rate's now within a plausible neutral range. The future policy moves will depend on incoming economic data. However, there were fairly large divisions within the central bank, with 3 officials dissenting. So 2 prefer to pause, which is probably a braver call than the next one, which one called for a deeper 50 basis point cut. So that's just someone lobbying Trump for the Fed chair job, basically. So yeah, we saw equities overall rally. The Russell was up 1.28, the most interest rate sensitive. So was the Dow, up 1.1. S&P was up 0.68, and the Nasdaq was up 0.42. Not much to talk about really in the rest of the market. Fairly scattered. We've got the technical indicators all at strong buys across the board in the Dow, the S&P, the Nasdaq, and the Russell. And yeah, look, they're holding second round interviews now, or final round interviews for the Fed chair. It's very short odds for Kevin Hassett to be the front runner. Although there was former Fed Governor Kevin Warsh, who was also in the running, presumably a dove as well. Yeah, look, I think this one overall was a lot more line ball than people think, and this rally overnight, I dare say, I'm going to go on the record and basically say I think that it'll be given back tomorrow or the next day. All of the rate cut hopium was all priced in. We're way too high here at the moment as it stands, and I really do think that need to be taking the opportunity to be getting rid of US tech and selling the US stock market. It's sort of become a little bit beyond a joke now, and everything's really stacked up too much. I mean, obviously Trump pushing to get these rate cuts. I mean, I just think that means now that we've got no, we're not going to really get any data. I mean, it's already the 11th of December. So there's going to be really no positive catalyst. So we'll be watching those technicals pretty closely if they start to weaken. At the moment, it probably sets up for a Christmas rally, but not of previous sized rallies. If anything, I would say the Aussie market is significantly cheaper than the US as it stands at the moment. Microsoft was off a couple, so was Netflix, down 4%. Nvidia was down 0.64. You've got this broader strength across the board, and it is pretty good. The rate cut is pretty good for certain sections of the market. Johnson & Johnson was up. Apple and Google, Broadcom were up. Micron was up 4%. Look, we had Adobe and Oracle report earnings as well after the bell. Oracle reported a pretty big adjusted EPS beat, but then missed on revenue and got smashed 7% in the aftermarket. It's a far cry now from where we were. I think Oracle must have halved since its rally that made Larry Ellison the richest man in the world for two odd hours. And we did say at the time, that happened back in 2001. He was very briefly the richest man in the world for about a similar period. Adobe was pretty impressive. They reported high fourth quarter revenue and profit. It also beat estimates. They lifted double-digit growth in its subscription businesses, stronger demand for AI-driven tools. Now, Adobe is one of those stocks, as I've mentioned in previous podcasts, that everyone loves to say is going to be the victim of AI. I think at some juncture that's going to have to be taken away. But there was a lack of positivity generally around Adobe, only up 0.5% despite the beat. We had, that really wraps it up for the week in terms of, Costco hit 52-week lows as well, actually. I didn't see the earnings report details, but as you can see here, Oracle, the numbers are still pretty good. Gross profit, 67% margin, 29% operating profit, 38% net profit margin. The revenue, disappointing software sales was what disappointed on the revenue, but their EPS was much better. I think this is probably a bit of a tale of, being out of favour due to that debt. But obviously revenue needs to be running if they're going to run that ridiculous amount of debt, because shareholders, as we saw with this down 7% move today, are impatient beasts. Silver continued its record run. It was interesting that platinum was down 2.5 overnight. All the metals were up except platinum, basically, and palladium. Copper was up 1.25. It's just really making that nice grind higher, $5.40 or something a pound. Gold eking out a small gain of 0.36, but silver was up 1.53, up 5.5 for the week, and around above $62 now already. Probably expect this run to continue for maybe another couple of days. Maybe it finishes up soon, but I mean, I dare say we get somewhere around the $64.5 mark and start to slow down a bit and do what we've done the last few times and have a bit of a pullback before we start to go again. Aussie dollar up 0.5%. I'm really liking the Aussie dollar at the moment. I mean, that Aussie's only up on the back of the US dollar being down 0.6. But I can't get my head around why the Aussie's not 20% odd higher. Truth be told, with the same credit rating or as the US, we don't print money all the time. We've got better economic numbers and we're looking at hiking. China really is the thing that needs to happen for that Aussie dollar to head back higher. But I think it could be something that just comes out of nowhere at some stage in the next 12 months. Which we saw bond yields pull back a little bit. The blue there is the 2-year, pull back 7 basis points, and we pull back about 4 basis points in the 10-year. Sorry, not even that much, 1 or 2 basis points in the US 10-year. The Aussie yields settled down a little bit after a really big run from late October at 4.1 to 4.7 now. So yeah. So just remember all of those, those economists, the kook and blah, 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 that were all calling for more rate cuts, more rate cuts, more rate cuts. You just got to be a little bit careful and read through the numbers, because these guys write what's popular for people to read. They don't write. They're not economists, half of them. Well, and even if they are, they're poor ones. So you've got to be very wary of where what's actually going on with the economic numbers. And as I said, all through this year, just ease away from people giving you an opinion on interest rates, particularly in Australia, that don't make their money off lower interest rates like the banks and guys who get clicks because they pump rate cuts for the housing market. And look, that Aussie, that call on the Aussie really came out of, I've spent a better part of the last month or so, and obviously compiling, our in-depth research over the course of the year, pulling together the 2026 market outlook. We're going to, you can get that at mosaic.mpcmarkets.com.au/subscription/trial-sign-up. And you get a 1-month free trial where you get all of our recommendations from 4 recommendation services, all of our premium content. You'll get the market outlook, access to the webinar that's going to be on the 15th of January as well. And if you're signing up, we've also got some stock picks around, quite a few stock picks actually around this market outlook. In total, there's 5 major themes we're looking for, investing themes we're looking for in 2026. It's ended up being fairly lumpy document really, about 45 odd pages, but pretty easy to read, as you can see. Good graphics and things like that. Not your standard investment bank. Small text and loads of jargon. This is actionable advice for themes and leading into next year. And given last year's accuracy rate was around that 80% mark, 11 of 14, do yourself a favour and get on to having a read of that over your Christmas period. It's a pretty easy read, and you can obviously you'll be able to test out the NBC Markets Mosaic app as well. That offer's only going to be available until New Year's Eve, and then it goes back to its recommended retail price of $150 a month, which is pretty reasonable given given the fairly timely and actionable advice and the amount of content, etc. on there. That pretty much wraps it up for today. Not much in terms of predictions for the ASX. I would say we're going to have our tech sector's been pretty beaten down. I think the Fed cutting really does make the RBA have to pull back a little bit. Your silver stocks are going to continue to run. Your gold stocks are going to continue to run. But the big miners will go okay, I would imagine, as well. But like I say, overall, I think there's some value in the Aussie market. If you've got US ETFs US-based ETFs in the index, I'd certainly be trimming those. That wraps it up. We will speak